Good afternoon, everyone. Gabe Velazquez here with you, transparenttrading.solutions.com. Hope everybody had a great holiday weekend, and back to business here. We've got really actually, before I start, a couple things. Obviously, sign up for the channel, talk to people. I need to grow this channel to keep it going. Give me a thumbs up. Add some remarks to the chat there, or leave some remarks. That also helps. I have a couple housekeeping notes here. I have a class coming up tomorrow at 4 Pacific, 7 Eastern, talking about correlations, but not, as you know, I like to actually talk about things that are a little bit different. Okay. Not the traditional stuff that you guys can look up on, whatever. I kind of have a little different spin on correlation. So, again, if you're interested, it's a free class. That's tomorrow. Go ahead and hit the link below, or there's also on Twitter. I've been tweeting about it. So that's that. Also, the newsletter this weekend. I actually covered a couple things in this weekend's newsletter for some of you that get it. In particular, I talked about nat gas, so I am going to cover that. If you do get the newsletter, it's not just, I talk about some macro stuff and whatever, but I always try to include a little bit, some tidbit in there that you guys can actually use and hopefully profit from. So if you are not subscribed to the newsletter, go ahead and hit the link below or go on the website. You can subscribe to that as well. Also, 5 days of free interaction with me in the mornings. So that's that on. I'll talk about that at the beginning. Now, also, let me update you on some positions that we have currently going at TTS. So we bought gold. We bought gold. Yes, actually, was it yesterday? Yeah, I think we got filled on that yesterday at 2001, so 2001.10. Okay, so we are long gold. And obviously that's up pretty nicely for us. We're up about 1.5x on that. Coming into the PPI tomorrow, we are trying to get long nat gas on the break above 225, right? So if you guys are looking at your charts on nat gas, I did mention that over the weekend. If you caught it at 2, or since right on the open on Monday or even on Sunday afternoon, you're actually doing okay with that. So we are along that. We're long a stock, by the way. I think I mentioned this. I've been mentioning it. Vale, VALE. It's a Brazilian nickel iron ore, kind of in the EV space, electrification space. That thing was up huge today. So a lot of my members are in that stock. We bought it at 15.25, just so you guys know on that. We are long TLT calls. We are underwater on those. So again, as you know, I always talk about everything. Doesn't matter win, lose, or draw, or not just talking about winning trades after the fact. That how I rarely gets that. Anyways, so yeah, those are the current positions. Trying to get long some SQQQ. We didn't get long. I did mention that I think it was last Tuesday session. And we actually didn't fill. But SQQQ went from 29 up to like 32 and change as the NASDAQ sold off. So we are still trying to get long on that. Possibly tomorrow with the PPI as well, and some other positions, JPM in front of the earnings on Friday. So those are stuff that's going on with us. We're having a decent week so far. Obviously, we haven't closed any trades yet, but hopefully gold, if dollar tanks tomorrow after the PPI, we should be hitting our target on gold. It is, it's aggressive because it's already moved up quite a bit. But in any event, that you still can buy pullbacks, but you got to be very careful buying after a big run up like this as well. I typically do not like to do that, quite candidly. As you know, I like to buy low, sell high. But sometimes, if the momentum carries, it's still okay. And I deem those trades usually very aggressive. So, anyways, all right, let's get into been very, very lackluster trading, as you guys know, on the averages, kind of just been range trading literally for the entire week. Since last week, we had a holiday, we had non-farm payrolls on Friday, had a very muted reaction. In a nutshell, 4,100, 4,200 is the range in the S&P. We've been inside those ranges, even last 48 hours since Sunday reopened. Tomorrow, PPI is going to be. We actually have two things tomorrow. That's going to be the big one in the morning, and we also have Fed minutes later. We also have retail sales and CPI later in the week. Retail sales, by the way, is going to be another big market mover, by the way, simply because if you recall last week, we had three data points in the economy that weakened the economy. We had bonds rally every single time. So I think market's also going to be really sensitive to weaker economic activity. And more or less, that's why we bought bonds. So I think bonds will rally on any kind of weak economic data. And looking at the TLT, you can clearly see on the charts, if you pull up your charts of TLT, which is the 20-year ETF, you can see a very clear, distinct 109 resistance level. And, this would be like, and the setup is usually typically when you have multiple attempts at a clear-cut resistance level, you're usually going to break out. So that's really the play with us on TLT. We're underwater on that right now because the bonds did sell off on Friday, but it's out till May, so it's not a big deal. Okay, all right. So on that, and then we know that there's been a ton of rotation internally, also in the market. Can't get into that right now. It's too, but essentially, Nasdaq has been down, even down today, rotating out of the Nasdaq into some other, primarily, some of these staples and utilities and so forth. And so the Nasdaq futures basically have been bumping right up against 32,250 for 3-4 times and pulled back hard and then holding around 13K. So they also have a nice little range, which obviously is we're going to bust out of that range, I would imagine, tomorrow, depending on the response and what kind of PPI number we get tomorrow. A softer number probably does create further upside, but it's really fascinating because again, there's still that battleground going on between the weaker data and inflation, and that is why I think market's kind of confused right now. Relative to what the Fed's going to do. Do they keep hiking because inflation is still high and risk, again, further bank crises and so forth. So that's, I think, what's happening in the last probably couple of weeks. And so it's going to be interesting how the response tomorrow to CPI comes in. But overall, it's all about opportunities. Haven't been a ton of great opportunities in the averages. We've been focused more on energy, on some of the stocks, nat gas, oil. By the way, oil has been literally since that gap. Remember, we were in UCO. We got up prematurely because we didn't know. Obviously, OPEC was the only one that knew that they were going to come out with that cut. But oil has literally been in a range since then, since a couple of Sundays ago when OPEC announced. But it looks to me like oil also may be ready for a breakout, right? So 82. Even today we had a pretty strong rally in oil, but still has not been able to break above 82. So that also setting up. One of the things when you get these range, these consolidations and these sideways patterns, I like to tell my members, the known is that we're going to break out of this. The unknown is when and how much and how far we're going to break out from. So, but these also set up for some really nice breakout type of situations, either on the option side with some strangles or just looking for a break and then a pullback. There's all kinds of ways to look at this. But in any event, if you're looking at that chart, you can see it's kind of coiling up. It's been kind of basing, and do expect some kind of a break probably in the next few days. Even maybe the CPI gets us to break out. We were trying to buy the gap. Clearly, that gap is going to get filled at some point because they always do. But who knows? Right now, today's action was pretty strong. Took us right to the top end of that range, but still has not been able to break above that. So it's going to be interesting. But we expect some kind of a breakout move in oil, either in either direction. Looks a little bit more on the bullish side, but you never know. Okay. All right. So that's that. Nat gas, I already talked about. 225 is the breakout. Also, looks like we've similar pattern down to 226.5 actually is the break. We are positioned to get long nat gas on a break. I do think it will run up at some point back up to at least the $3 mark. And so we'll see how that goes. Other than that, bonds also been, since I was here last, bonds really haven't done a whole lot. The 30-year, similar to the TLT, went up to 117, kind of in no man's land, down to 113. That's the 10-year. So pretty much big, broad range in bonds. Maybe tomorrow we touch the lower end or the top end of the ranges in the bond market. So we'll have to see how that goes. Dollar also been all over the place. Big ranges. Top of the range is probably going to be 103 down to 101.50. I think what's been really frustrating for a lot of people, especially in the dollar, is clearly the dollar's been trending lower. However, we had these huge snapbacks, the last couple of weeks, right? The dollar looked like it was going to fall off to 100, and it snaps back hard, and it did that just yesterday, right? It looked like it was going to break 101.50, and then had this huge rally, and now it's right back down again. So almost like a sideways sawtooth kind of pattern. So you got to wait for, if you're of the mind that it's in a downtrend, wait for the snapbacks and then sell it. Don't chase the ball, don't chase the breaks to the downside, because that's going to hurt you in this kind of environment, right? So you still have to be waiting for, and by the way, buying low still works here, because you've got some really nice pops, even in the context of a down move in the dollar. So that's the kind of patterns that I subscribe to. I'm not big on all that, but in any event, now this is where gold comes in. Obviously, silver is not kind of tracking that as well. Silver looks like it's also similar to nat gas and oil, and silver's looks like it wants to break out as well. Silver's been coiling up here, very, very tightly wound up between 24.60 and 25. Let's call it 25. I don't know, 25.25, something right in there. So that also looks poised to for another big break on silver, even though again it's been kind of going up in a kind of a ladder, kind of goes up, pauses, goes up, pauses, that kind of fashion. So obviously you still want to give the bulls the benefit of the doubt, but it's run up so much that we could have a break on that thing to the downside as well. 26 is where I'm looking to get short on silver. So there may be still some room to the upside on silver. $30 is the all-time high. Unlike gold, which we're approaching the all-time highs on gold. Gold's on the future side. Gold is approaching an all-time high, and it may take that out. The all-time high is roughly 2070, 2080, something like that. on gold. So we'll see how that goes. Okay. Um, and then lastly, grains. We had a report today. We had some volatility, but not a whole lot. Nothing really new in the grain markets. The only kind of grain market soybeans have been kind of moving. Wheat also just been stuck in a range. Corn also just been massively range trading. So not a lot going on in the grain markets. Maybe that's due for a break here. And even today's big uh, report on the acreage and all that was not enough to get anything moving on the grain markets, anything of substance. So yeah, that pretty much sums it up, everybody. So again, lackluster trading in the averages in front of a bunch of economic data coming out, which is going to be market moving. It's probably the quiet before the storm. One last point before we get out of here. VIX, been writing about that. So VIX touched, still can't get down to that 18, 17 level. We closed today on the VIX at 19. The target for me is going to be around 17, 18. That would be an aggressive, that would mark some complacency. And, I've been writing about that quite a bit. Look at your chart of the VIX, go back last 18 months. Every single time we hit 17, 18 on the VIX, what ensues is a big drop in the S&P and the averages and stock averages. Whether that happens this go around, remains to be seen, but you got to keep that in mind. Okay. So keep that in mind. Again, CPI tomorrow, Fed minutes, PPI on Thursday, retail sales and bank earnings, lots of stuff. I think, moving from these last few quiet days in trading, we're going to have a huge amount of volatility coming up, which if you're prepared and have some proper strategies, will present some tremendous opportunities. If you are if you're afraid of the volatility, then you probably want to stay away in the early part of the morning, because you will get a lot of volatility starting tomorrow. Okay. All right, everybody. That's going to do it for me. Again, if you want to attend the class, I'll spend most of the about an hour just going through charts, talking about correlations, how I look at them, and so forth. So if you want to sign up for that, that's going to be tomorrow. So there's still time to register for that, and everything else. Okay. So I'll see you guys on Friday. Take care. Have a great rest of your trading week. Okay. Take care.